Now, the last requirement, the transfer pricing proposal. 8 marks available for it. Okay, so uh, which color to choose? Yeah, right. In 2005, the first Maddy franchise restaurant established in a neighboring country was opened. The restaurant is geographically close to the Maddy's warehouse, from where it distributes items to own restaurants and the franchises its home country. Food items can move freely between two countries, and there are no tariffs or administrations barriers to doing this. Okay. Medi usually negotiate fixed prices with food suppliers for 1 year, so it is also be able to fix the price it charges franchises for food items for the same period. The franchisee in the neighboring country, while accepting that it must purchase all food items from Medi, has asked that it be charged for these at the market price it would pay for the nearest equivalent products in its own country. The board has asked you to evaluate franchisees' proposals. Okay. And this is for 8 marks, 1 mark for one relevant point. Now, for evaluation, that is advantages and disadvantages. Okay. So, transfer pricing proposal. Firstly, we will discuss the advantages. The a benefit of using lower local market price, a benefit of using lower local market price is that it would allow the franchisee to compete with other fast food restaurants in the country. Okay. Mm, there is no indication of whether any other special arrangements, for example, a lower rate ongoing fee have been made to the compensate the franchisee for this. No indication of whether any other special arrangements, for example, a lower rate ongoing fee have been made to compensate franchisee for this. Okay. Using a market price may mean that Maddy charges a lower price to the overseas franchisee. In the long run, this may help to establish the Maddy brand in another country by supporting a franchisee to be successful. Finally, this would encourage franchises to set up there in the future, which is consistent with Maddy objective to maximize long-term shareholder wealth. Now, the finally disadvantages of the proposal. The franchisee presumably wants to change the transfer pricing policy because it can source similar food items more cheaply. The market price may be variable, which would increase the variability of cost. variability of cost for the franchisee, and revenue for Maddy. The price may be temporary. So if the market price were to increase, were to increase, the franchisee may want to revert back, may want to revert back to the current arrangements. The variability of costs and revenue could also increase due to currency fluctuations. If the market price was charged, if the market price was charged in the franchisee's home currency, Maddy would suffer all of the currency risk. And vice versa. So, although we have covered the, the requirement, but let me give you one very useful um, as well for this part of the requirement as a disadvantage. Using a different transfer price for this one, franchisee will increase the time and resources. Both parties have to spend negotiating transfer price. Okay, though franchises are separate businesses from Maddy, in practice, the market price would probably, adjust it to reflect factors such as the cost of transporting the food, transporting the food items to the franchisee. This would also additional resources and make accounting for the transfer more complicated. Okay, so in the end, in the end, now finally, here is the conclusion. In conclusion, that there are no other taxation or legal issues which may affect the transfer price. The franchisee proposal should be affected, oh, sorry, accepted. Why should I say accepted for a limited period? Limited period by providing lower costs to the overseas franchisee. This would help the franchisee. This would help the franchisee become established and in the long term would help grow the Maddy brand in the neighboring country. That's it. And I hope it's clear to you all. Overall, let us know. Look at the our answer in the end. Well, as you all know, first requirement was giving us 14 marks, second requirement 18, and last one was 8. So we get 1 mark. Here it is. 1 mark for this, then 1 mark for relevant point. So you can see here, as you can see, I use this paragraphs That's the introduction of the report. So 1 mark for this. Overall, 1 and 1. Right. Evaluation of performance report. 1 mark here. 1 mark here. So over 4 marks. Here it is fifth mark. Here it is 6 mark. Here we get 7 mark. Here we get one more mark, 8. Here we already passed the requirement, that is 9 marks. This- Oh, first one was for 14. Yeah, we already passed on 7, right? Now 10 marks. That's the 11th mark. That's 12th mark. That's the 13th mark. That's the 14th mark. And here, for the teaching purpose, I all write the extra for the conclusion, better conclusion, 1 mark more, right? Then difficulties in interpreting data about cleanliness. Here we get 18 marks. So one, two, uh, three, the 4, 5. Here we get 6 mark. Here we get 7th mark. Here we get 8 mark. And congratulations, 50%. We passed it already. Then we get 11th mark. Then we get 12th mark, 13th mark, 14th mark, 15, 16, 17. Out of 18. Then alternative methods. Again, 1 mark here, 18. Information it for this one here, 18. Then it's for the teaching purpose I wrote extra. Then for the transfer pricing model, 1. Here it is 2. Here it is 3. Here it is 4. That's 5. That's 6. That's 7. That's 8. And then I wrote extra for the teaching purpose, and then the conclusion for the 1 mark. So that's how you should do it, right? 1 mark for relevant data. Uh, that's it. Use the headings, get the bonuses, okay, by you know connecting with the scenario, by being the skeptical. You get all those extra marks as well for the professional skills marks. So I hope it is clear to you all. And that's it for now. See you next time for the next question.